What's up, everybody? Welcome to another video. Today I'm joined by Halcyon again, and we're going to be showing you some calendar spreads and what he's been working with as of recently. And I think you're bringing the triple calendar into play today.
Yeah, so we'll look at the triple calendar in a little hot second here. Before we get into that, though, I want to talk a little more some directional calendars, the sexy single calendar, and we'll kind of talk through what that setup looks like and what kind of expectations to have on that. This is quickly turning into my favorite type of trade right now in this environment. I still love my doubles and triples and quadruple calendars, but those are very much non-directional trades. And we will talk a little bit about how you identify this, what the setup is that you're shooting for. The interesting thing with the single calendars and this is specifically SPX, it works for its offspring, the SPY as well. You can do the same thing on there, obviously just smaller capital requirements. But the single calendar it gives us kind of some interesting advantages when we're moving directional. Obviously, the stuff we've talked about before, if you haven't watched the other couple videos we've done, those are more non-directional trades, and we're using doubles and triples and sometimes quadruple calendars to take advantage of a non-directional version. So we'll unpack a little bit what these are doing right now, and then talk more about that triple in just a minute here. Sound like a plan?
Sounds like a plan to me.
Perfect. All right, so let's get to it. How do you pick and choose? Let's go through the first things we always do, which is let's look at the VIX. What's our VIX doing to set up a calendar? Now, in a non-directional calendar, this is super important. Actually, this is a perfect place to set up a new double or triple, and we'll look at that in a minute here. But in a non-directional calendar, we want to make sure this VIX is where historically it typically trades. So we're just going to look at this right side chart, which is the daily view. We can see we're getting to kind of roughly the general area where it's on its lows for a little bit, where it's been for the last year and some change. So we're removing the variable of volatility falling out from underneath us on a non-directional version, which certainly causes major problems because it makes everything you bought becomes way on sale. So it's sort of like being that guy or girl who goes and buys whatever random thing they're buying and then finds out next week they're 30% cheaper, and you can buy the same thing for that exact same for 30% cheaper price. So don't be that guy or don't be that girl. Know when your sales are coming. So in this case, we're probably where VIX typically likes to hang out right now, and this is a good time to look at putting one of those on. So maybe at the end of this video, we'll actually look at a potential one we would do.
Sounds great.
But before we do that, we always check VIX first. Now, the interesting thing with the single calendar is I don't really care what the VIX is doing when I'm looking at the call side versions of these. The put side version, which I'll show in a moment, because we're actually getting to the point where I might want to look at doing one of those too. The put side, I do care a little bit more what the calendar is doing, what the VIX is doing, because I want it to actually spike up, right? And we'll talk about that in just a moment. But we're going to talk about the call directional ones, the last two that we've done in the room over the last 2 weeks, and what they're kind of doing currently. So let's go back over this. So look at the VIX. Great. It's around a decent space to do this. Now we go, because we're doing on the SPX, let's look at our underlying, right? Now, because I'm only looking at roughly being in this trade for 3 to 5 days, I don't care what the daily is doing. It's not my primary driver, right? It's my shorter time frames that are going to help me understand where I am on the playing field. In this case, we'd like to use like the football analogy, roughly where I'm on the playing field, versus, looking like viewing the chart because it's 3 months down the road and I don't really care about 3 months happening. I just care about right now. What am I expecting for the price move? Okay. So I'm looking at the hourly primarily, which is this right side chart. The middle chart's a 195-minute chart, which basically just splits the day in half. So each bar is splitting the day in half. And then, of course, we have the daily, a 2-year daily for me is how I like to use. These top secret lines that are drawn in on very, very hard to do, extremely difficult math. Don't try this at home kind of thing. Certainly not a free thing you could find at ThinkorSwim with standard deviation channels. Don't look for those because they won't be there. But if you did find those, they're just standard deviation channels. So just, there's 1, 1.5, 2, and 2.5. And feel free to colorize those however you want. But I like to use those to give me an understanding of, again, where my support and resistance historically is for whatever time frame I'm looking at. Okay. When I get down to these kind of green zones, that's usually We should pause there. We should stop with that price movement and then bounce back up. Typically on the 195, that's around the white line to the light blue. So when I get into those ranges, I should be looking at going the opposite direction, right? Which is a little hard to do, because think about the psychology of trading is when it's all falling down, what do we naturally want to do is run away and get out and follow with whatever's doing that, right? Which is, mastering trading, which is really hard to do, is learning how to buy into weakness and sell into strength. And that it feels so counter and opposite in your brain when you're doing that. However, when you have some kind of visual system to help you understand where you are, it makes that feeling of not wanting to do that a lot less. So with a single calendar, which is what we're going to talk about next, is we utilize these. These are the last two. I'll show you the one that's currently on, the one that we closed actually 2 days ago at this point, and what those are currently doing. So if we could go back in time, which is where the first one was on let's zoom in on this. We got price into my buy zone, which this is telling me this is my side of the field. It means that typically I want to be directional then, right? So I'm looking at going in the direction of where I think this market's going to change. So I'm going to set some things up that are more directional oriented. And for me, I'm using the mean as a place to put my direction. So what I did was it was around 37, 60s or so. And this is on a Thursday, I believe, 3-4. I think that was a Thursday.
Yep.
Maybe it was Friday.
Because Friday was
Thursday, Friday. Anyway. It was a Thursday or a Friday, and I was like, okay, well, we're down in this range, and this is where I typically want to go. Historically, this very bullish uptrending market, if it gets down in these ranges, it almost always has been pulling back, and there's almost a 90% chance we're going to jump back up at least to the mean. And so I'm going to put on a single calendar and try to play that movement. But because I hate watching my options disappear of value because theta is eating them up, instead of just doing a straight long call, I want to give myself a little bit of runway, a little bit of room to be incorrect on this, right? Because timing the market is hard as hell to do. It's really hard to be perfectly timing these things back and forth. Hence, timing a reversal bottom with any kind of degree of consistently doing that is hard. There's just no other way around it. It's hard to do. So what the calendar does, the single calendar, it gives me a little more runway to be inaccurate on this. So it gives me some room. And guess what? I'm not even close to being 100% accurate on these things. But if I know I have some time to work with this, and I know my levels are roughly in my buy-ish range that I should bounce back, well, then I feel like I'm willing to take a swing at this. And I'm willing to take a look at this for a day or two and be wrong. And if I break and close below these levels down here, then I know I'm incorrect, and I'm just going to close the trade out. And maybe I'll lose 20% on that particular trade. But here's the crazy thing: what the risk reward is, right? The risk reward is I might lose 20% for the opportunity to make 4 or 5 or 600%. Okay, so it's not a bad risk reward, and I get a nice day to day and a half to have that figure itself out, right? So it's not like I'm put it on, and if I'm not immediately right, I'm upside down on this thing. Okay, like where a normal call is, you're paying for the time to hope it works out for you. So let's head over to the Analyze tab, which is where we want to view all of these things through, because it gives us a whole new insight to how the trade is going to act and move and adjust on you. We are on today's date, March 11th. So the one we did last week is not going to look correct, but you'll see, I'll show you where the setup was. So again, keep in mind, it was roughly, what is this? It would have been, this day. So 3-4, I think we put on somewhere between 12.30 and 1:30, and the price is around 37.60 or so. And let's switch over. So at this time, 3-4, here we are. Again, stuff's going to look a little bit funny. So, but this is the shape that I was looking at, right? So I put on a $3,900 calendar, which really just means is that I'm buying a long 3,900 at an expiration that's a little bit further out, and then I'm selling a 3,900 that's an expiration a little bit sooner. In this case, it was March 12th that we sold, and March 15th that was the long. Now, why did we do that? It's simple. Is what I'm trying to do here is offset that theta effect, right? I don't want to have to be paying to hope I'm correct. I mean, I know my levels are where they are, but you still can be wrong, right? There's the possibility of being wrong. And I do not care for watching my profits disappear while I am, waiting to be correct on this thing. I gave it at that time basically 7 days because my anticipation was I'm going to see the market bounce back from here. I don't need 3 weeks for that to happen, right? And all I have to do is be slightly up on the market to make money on this. Okay, now, yeah, this 10 lot, if I'm dead correct on this thing, I'm making 15 to 16,000 on this for the risk of 1,750. So
Hmm.
not bad to have, more than 10x possibility on this trade. Actually, that's pretty effing sweet, right? I mean, there's just no other way around. That's pretty sweet.
That's ridiculous.
So then what happens is, right, I'm looking at what my Greeks are doing now. Again, this is going to look a little bit funny just because the fact that it's actually pricing off of today's date, right? Because we're at 311.
Hmm.
But if you were looking back in time on the date that I actually did this, this was trading for a buck 75. And within a couple of days, we actually will flip this around so you can see actually the real price. We'll analyze the opposite trade here. Turn him off. Open him up. That's actually real-time price. So today, literally, it'd be worth $4.65 today. Wow. It's been at a high of about $7 a couple of times yesterday. So again, think about it. You paid a buck 75, and you could have gotten out for roughly $7. And honestly, the trade was extremely painless. I mean, it was just sit and watch theta work for you and price direction work for you. Now, what happened is shortly after, if we could look at our charts, right? I wasn't expecting this fast of a move up, but I was expecting a little bit of a grind to maybe get back to 38.30 or so, maybe 38.50 if we got lucky on that. I mean, it went immediately up to 3,900 pretty dang quick, but price, moved, rocketed right into this range, and I got to 38.30 pretty quickly within a day of this particular trade, and we were immediately up. So I think the next morning, in fact, actually, this is interesting. The next morning, if we actually look at that day, this next morning, this would have been the Friday, right here. So here's the end of the day. Here's that next morning. We were down a little bit that next morning for the first 2 hours or so, and the trade was still up. So we were underneath what we bought it for. I think it was around 37.60 is what we purchased it for. The actual underlying SPX was at 37.60. We paid a buck 75 for it. It opened up for a minute in the morning, and then the next hour it sold off all the way down to about 37.30. I mean, it was a pretty volatile morning. And so even though we were underneath the price of our underlying about by 30 points, our actual call calendar was still up about 20 cents on the trade. So it was worth trading for about $1.95. So the question is, why? Like, that makes no sense. If you bought a call calendar or a call position on any, doesn't matter what it is, and you go under the price by which you bought it, you're upside down pretty significantly on that open call. What happens, though, which is super interesting on the call calendar side, which is why I say you have a lot more runway to work with, is the volatility, of course, spikes up when the price goes down. And what does that do to your options? It makes them worth more. So it really gives you this kind of extra buffer of almost 30 points more on the SPX before you really start seeing it going negative on you. So when I say you give yourself 1 runway to be wrong and 2 time to be wrong, that's a really nice 1-2 gift to work with as you are anticipating which way the price direction is going to go. Okay. So that's a pretty amazing thing to figure out when you're actually using VIX in your favor, is even though I put it on around 37.60, right? What happened is my T+1 line, this pink line, when it bumped up in the morning and then came right back down all the way to 37.30, so 30 points under where I put it on, it actually, that T+1 line was bumped up positive because the VIX jumped up a couple of percent. So thus it offset some of my potential loss. Actually, I had a little bit of a gain. Then of course we saw what it did is it ripped all the way back up here, right? So here's what the interesting thing that happens in these trades is that as you start moving into the body of your calendar, right? You see all this blue line is what your profit is at expiration. Start moving into the body of this calendar, and the profit starts exploding in value for you, right? Again, it's trading at 515 or 525 in real time right now. So I don't know about you, but getting 200, 300, 400+% on a trade in a couple of days that has, really not a whole lot of downside risk is not a bad, part to have into your trading plan in general.
And even, I don't want to cut you off, but even, like you said, buying 1 contract, paying.
Even just do 1 contract on these. That was whatever, it was $200, $250, I think is what $250 to $300 on a single contract with that. again, if you did 10 lots, you're sitting at quite a bit higher, higher profit there. But
Mm-hmm.
again, it's all relative to your size. I was willing to risk on any of these. I'm willing to risk somewhere between 1% to 2% of my account if I'm dead wrong. Keep in mind, to lose the max loss in this thing, I have to be dead wrong for like days and days on end. And so, of course, if I'm not anywhere remotely close to being correct on this thing, I'm not going to sit there for 5 days, beating my chest saying, I know I'm right on direction here.
Praying,
No,
yeah.
what you're going to do is you're going to exit the trade, or you're going to add another calendar on to try to offset some of the losses, right? Which is a little more advanced than what you would do. And jump into the channel and ask me questions, and we can, specifically talk about that on the Discord if somebody has a question on that. Easy way for that to happen. But yeah, so that's kind of the very, very, they're very forgiving to be not perfectly timing these correctly, which guess what? That's really hard to do in general. And so where this thing ended up, it's now trading up here at 39.50. So we went all the way through the body, but as you're doing that, right, as you're going through the body, boom, and this is just money that's sitting here just piling up. I mean, even though we're not quite perfectly timing the actual expiration, which again, you always have multiple variables when you're doing options. It's not just the price. You have time and volatility and delta and gamma. You've got, theta, you got all kinds of different stuff that's going on, that you have to calculate into this thing. But the nice thing is that as this moved through the body from back here into over here, I mean, you had 3 days in a row of plus 200% return sitting in your account on this if you had taken the trade that you're looking fantastic on, right? Yep. So that was that was the first one. This is the second. That was on 2 weeks ago. Here's the one that's currently on, and all we did, right? Let's just walk through what we did on this thing. Here we go. So this is the $1.75, 4,000, 10, 10, 10. Let's move this to actual today's date. What am I doing? Here we go. So you look at this guy and go through the same thing. What was the setup here, right? So this one was put this on Wednesday at like a little 12:45ish, 1 o'clock, somewhere around there, right? And yesterday, if you notice, here's where we closed at. So here's an interesting thing to pay attention to. This is going to talk about being forgiving. 12:30, 12:45, somewhere in this range, right, of this candle is where we put this thing on. And I want to say it was trading at 39.02 or 39.03 when I actually initiated the position, right? And we paid $1.75 again for it. And if we look right now, analyze the opposite trade, it'll tell us what the current price is going for. Close him out. Check this. So we're going for 285 right now. Okay, this is the most recent version of this. So not a bad, nice little 70% return or so, give or take my numbers for a hot second there. But the interesting thing was that when we put this on around this time, where did price close? At 38.98, I believe, is where we closed yesterday. So I was actually 3-4 points, 5 points or so underneath what I actually put the thing on. But the trade was up to $1.95 already at that point. And the reason for that is because theta was then working in my favor, right? It wasn't VIX didn't help me that time, but it was theta that helped me out, right? Because when we go back on here, what do we have? Theta's paying us. We have a positive theta. So it worked out to being a positive trade. I'm not certain what's going on, why it's showing me a negative return right here, because this should not be the case, but whatever. Toss is losing its mind at the moment, right? Because it's clearly up $1 or something, plus. Anyway, point is about $1,000 right now if you did 10 lots in this, $100 or so, $150 if you did, a single lot in this. But either way, the point that you're looking for is I made this one at 4,000. Oh, that's why, because price. Here we go. There we go. 1,049. That's where we are right now. But this again, as we watch this thing go through the body of this, my anticipation on this was that we would get somewhere around. We'd push towards the 4,000 mark. I was hoping to get the highs of the day, get to the highs of the market around 39.50s, and then I'm expecting us to have a little bit of a pullback on this from that point. But either way, moving into the body here, I'm going to keep seeing profits just going up till we get to this middle mark. I mean, that's not a bad return for a day and a half of being in this trade.
No, that's awesome.
And it was again really, really painless trade overall so far. We haven't had anything. We've had no heat on this thing. Our charts were giving us a bullish price action, so that's why we stayed bullish on this. And now here we are looking at, again, from just a single calendar side of things, it's pretty attractive to, work your way through these things. Let's get some of this stuff off the charts. So again, 4,000 where I put this on. I would not do this right now because we're obviously already up a good chunk of change on this. And honestly, I'm thinking of actually doing a bearish version of these as the next one for this reason. Good chance. I mean, do we go and try to hit 4,000? That's a big psychological number. They typically act like magnets. Any of the solid numbers do 39.50. 4,000 is going to act like a magnet to price. When I look at my daily view of this, right? I mean, 39.90, 39.88, 90, which is just a stone's throw from 4,000. Mm-hmm. We're probably going to go hit that here in the very next 5 trading days or so. It's very likely we're going to go hit that. I mean, there's just the momentum is going that direction, and whichever momentum's going is going to want to keep going. Short of some crazy news thing coming out, we're likely going up to touch that. Mm-hmm. It's just how the market likes to trade, right? It's not so again, that's what I expect to have happening. So hence why we put the 4,000 on there. However, because I'm really looking at the next couple of days, do we get all the way up to this dash red line, which is 2 standard deviations away from the mean, to go all the way up there in the next couple of days? I don't know. I'm not certain. It's a good question. Mm-hmm. We're back to the mean here. Typically, if you notice the 195, you bounce over the mean by just a touch. So if we statistically go up about that high, that's going to put us right around 4,000, mm-hmm. give or take, right in that neighborhood. So now the question, though, is like, how do we play that? What else do we do? Obviously, we have this calendar on and this guy at expiration. So let's just say we are sitting at 4,000 we hit that by next week, mm-hmm. right? Next week, whatever, on the 17th. We're sitting at pretty healthy profits. This trade, I believe, is though at the 19th. Yeah. So let's go to the Friday of next week. I mean, you're going to be sitting at making 9,000 upwards to 15,000 on a trade that you put 1,750 into, right? So you have the possibility for 10x to 15x your return in a week and a half if we can land on price around 4,000. I'm not personally planning on that being the case because that's threading a needle at this point. But still, if I can get half of that, I'll happily take a 5x return for very little pain, which is what the first one did. I mean, like I said, we got rid of that one at 3 and some change on the first one, and then we called a few more and got rid of around $650, I think, yesterday for it. Paid $1.75 again, not a bad deal. So, there's the sexy singles. You obviously need to have a setup for these. Don't just put them on randomly and hope that they're going to move. And then probably the worst thing you can do on a single specifically is put it right on top of price. So don't do this. This is what you're going to ask to get yourself screwed is taking a single calendar, putting directly over the top of price. So let's just do it like this and we'll look at it, right?
Yeah, like
so
right where it is right now.
This is the single right on top of price right now. Okay. This is when you're doing it right over the top of price, that's non-directional that you're trying to set these up as, not directional. Okay. This doesn't give you enough room to really work with the trade, and it'll end up screwing you because there's no way on earth this SPX is going to stay at 39.50 for the next 2 weeks here. It's just not going to happen.
2 weeks straight just doesn't move.
Yeah, and the moment you move to one direction or the other, you're immediately going to losses, instantaneous, which is why you don't do calendars directly at the price, right on top of it. That's why we do doubles or triples, right? So that we give ourselves some room to work with. Mm-hmm. So let's go ahead and look at making a double and a triple. Again, looking at our charts, if you had to take a guess, right? I mean, everybody is doing this. If you had to take a guess where we think price action is going, I'm going to say we're going to push a little higher. I'm going to take a guess. We're going to try to hit 4,000. Don't know if we'll actually get there. I think we got some pretty good resistance in that 39.60s range. But if we get through that, we're hitting 4,000 pretty easily, pretty shortly after is my guess. But that then puts us right back to where we normally have some kind of sideways to downward movement. And for me, then I'm going to look at doing some calendars that are going to take advantage of that price movement. Okay, so I was being a little bit, I wouldn't say I'm not bearish on the market at all, but I'm saying price action for the next 2 weeks. I think we'll try to get 4,000 and we'll pull back off of that. Mm-hmm. How far we pull back off, I have no idea. I think in this case, trading range, I'd probably look at a triple calendar because I want to have a lot more width in this thing than I'm just doing a double calendar.
Mm-hmm.
So let's just look at the estimate of what the price is supposed to be for the 26th and 29th, which is where I would put this at. So 131 points is what we're looking at. Okay, so let's at minimum, I want to cover that spread. So if we're building this thing out, making a triple calendar, let's for sure look at one at 4,000. Right, we know for certain we're going to get. We're not for certain, but there's a good chance we're going to work our way to that price. Is my guess is towards 4,000. Because I want to give it a little more, couple points. I don't have to defend the thing. Let's make it 4,025. Mm-hmm. And then I would put the other ones on. I would have a little bit more, give it some more room. So let's make this one. We try again when you're making these, you want to try to have your legs you want to start about 50 points away. So if you're doing on the SPY, do about 5 points away, but on the SPX, about 50 points away at minimum, and then look to stretch them out a little further depending on what the actual sag looks like. So I'm going to try 39.90 to start. Mm-hmm. Keep that one as a call as well. Let's see what he looks like together. And check the price. So he's so notice how there's like almost no sag here. Mm-hmm. This is too close. So let's make them further out. Sorry, of course, not even close to 39. Let's do 39.70. Okay, so this looks a little more like how I'd want to start this. Mm-hmm. Okay. And then if we add another one on here to make it a triple, let's make him, let's go on to 39.20 to see how he looks. Okay, change his price. There we go. So what this would tell us is that if we just look at this shape, we've got more room to the upside to work with, mm-hmm. which is fine because we're expecting, short-term price action to move over here somewhere, which is great. And then what I expect is that we would then kind of flip the story on this, where we have a lot more room to the downside to work with, then, right? Because then we'd have all of this area mm-hmm. available for downward movement, which I do think if we go and hit 4,000, that the probability of us just ripping higher past that is not great. Mm-hmm. I think that we'll stay there or pause there for a while. But something like this is what I would look at from a triple calendar perspective. And this is making the bet. This is slightly directional. This is making the bet that we're going to see ourselves, moving this direction in the next week or so, right? That we're going to be somewhere over here. Mm-hmm. That's what we're betting on. Right, our theta is paying $469 per day on this trade, which is not bad. So it's going to help try to keep putting pressure on this. Right. What's the other major variable we look at? What's the VIX doing? VIX is at a pretty decent spot where it typically bases, so I'm not worried about that. Mm-hmm. Just smashing our price around, dropping our price pretty significantly. So I think that's, again, I look at something like this. If we want to get a little more advanced on them, what you would do is, once price moved up here and hit your kind of targets, you'd close out that 4,000 leg or that 4,025 leg. You take the profits on that, and then you'd expect the price to come back down into these ones, fill their profits back up, and you then close these guys out. Mm-hmm. But that's a little more complicated. We want to get into on this particular quick video here. So, recapping quick. When you're doing more than one calendar, if you're doing just a single calendar, you should be directional in how you're putting them on. So it should be in front of price or behind price. If you're doing multi versions of the calendar, so triples or quadruples or doubles of them, then what you're trying to be is directionally neutral initially, right? So you're not trying to be timing out which way the price is going to go. A different thing you could have potentially done on this is, again, just think of the way you should think through these. Mm-hmm. Another way you could have done this is if we went back and looked at this opportunity that presented itself a week ago, right down here. You could have said, we have all this upside room to work with, right? This is going to be our playing field. So we're basically at our end zone here. Mm-hmm. We have the entire field to work with. So maybe I create a calendar that's kind of covering this 38, 50 or 3,900 range all the way up to 4,000, and let it move into that price, which is going to, that would have made you'd have done very, very, very well on that particular trade. knowing that the playbook calls for being a little more directional because you are in the range where you typically reverse and go back up.
Mm-hmm.
So again, that's ways that you can try to play this, different ways to get, go from being just non-directional versions to being directional if you'd like. If you have your own flavor or spin you like to view, how you like to do your own analysis on the markets, and you have a pretty good idea of which way it's going to move, this is one of the ways to go about taking advantage of that. I mean, honestly, and I'm looking at this now, even though I know that 4,000 is what I think we're going to run to, this definitely looks like if a place that I want to start considering putting on some movement to the downside. Not because I think the market's cratering, it's just because it's what normally happens when we get up to these ranges.
Mm-hmm.
We might push for a hot second above this 39.60 range, but we're going to be in this range-ish where we reverse back from here. So it's just normal. It's healthy price action, right? You move up, come down a little bit less, move up further, come down a little bit less. You just kind of keep staircasing your way up there. So one interesting thing we should talk about is taking advantage of the downside versions of these. Mm-hmm. So I'm going to show you how you can have actually improve the profits on these things by almost like exponentially, essentially, by using VIX for your advantage on this. So let's just say price wise, we get ourselves into, I don't know, 39.80, 39.85, and we're like, yeah, this is roughly where we're going to turn back around. And we think it's going to go back down to say 39.20. It doesn't matter what the number is, but we'll just take a guess on this. So if you notice when you put on the 4,000, we'll just grab the 4,025. Put that calendar on. What are we looking at here? Theta is paying 120, Vegas at 308, and we get all this room for profit, right? Mm-hmm. Well, if we flip that around, and let's say we made it down to the lower end, we made it say, we'll just do 3,900 here, because why not? Actually, a little lower. Let's just say reverse from here. Let's go 38. We'll do 100 points away, 38.60. Okay, so now we're expecting it to move back, right, into price. Okay, we got some runway in the upside to be wrong still, but not as much as you would if it was flipped around. Whereas when you're doing an upside version, because VIX works for you a little bit, when it goes down, it will pop the prices up, so you get a few more points to work with before you're negative. Mm-hmm. Doesn't so much work on the downside. However, here's an interesting thing that happens. So notice what Vega is doing, or your VIX, essentially your volatility measurements. This is how sensitive you are to what the VIX is going to be doing. Okay, so the VIX pops up 5%. This is the sensitivity measurement of how sensitive you are when that VIX jumps. Now, notice what happens if I stretch out my long date a little bit longer. So make it the 29th. I just go 2 days further, the 31st. Mm-hmm. Notice what happens to my volatility now. It jumps up to 500 from 399. So why is that important, right? So if I have a really good reason why I want to go downward on this, I think that we're up in the range. We're going to pull back just to say maybe, back to the mean for a second here, which is not uncommon. Right? When you get up to these top end of the ranges, you typically pull back to your mean or somewhere in that range. It's pretty fast, pretty violent, usually a couple of days, or it's been just a day at a time at this point. Mm-hmm. But we look at this and we say, okay, if that's going to happen, what's going to happen to VIX if it pulls back? Does VIX go down or VIX goes up? I mean, VIX is going to jump up on you. It's going to probably move up in the magnitude of 10, 15%, mm-hmm. right? So watch what will happen here if we move the price down. So let's just say that we put one of these on. We'll see what he's going for. He's going for $6.35, a little bit more expensive. We'll lock that price in. And let's just say that we did have this happen tomorrow, that the VIX, that market drops down to, rips off 50 points, which is not nowadays. It's like, that's normal. Up and down 50 points is normal.
Wild.
Right? So what would we have to do? We have to factor in our volatility is going to go up. So first off, we're going to go 50 points down. Let's say we go up all the way to 3,900. So we're sitting here. Right away, and this is if you didn't even count it, we'll move forward one day, right? So right away, we're going to be sitting around $1,200 in profit if you move down 50 points. But you need to factor in that your volatility is going to jump, probably 10%. Maybe we'll just say it's 5%. Mm-hmm. I'm going to guess more like 10%. But what does that do, right? Come on, show up. How you doing, buddy? There. So now we jump it up 5%. Uncheck this, bring them down, and notice what happens to your profit now. By just having 5% volatility, you're at 3,700 on the same exact trade and the same exact point movement. And how we took advantage of that is if I adjust, I'm just adjusting my long leg a little bit longer out, which gives me some more vega to work with.
Mm-hmm.
Okay. If I took that exact same long leg and moved it in closer, look at, I mean, profit. I mean, this is not accurate anymore. It's part of the pricing is wrong, but the price of this thing is not negative; it'd be positive for sure.
Mm-hmm.
But this would be, you're losing about probably $2,000 worth of profit potentially out of this thing. So put them back to that 31st. So it's a really interesting way to play the whole volatility idea, knowing that the VIX will jump up on you when price goes down. Yeah. And thus you can take advantage of that, especially if you have a setup. Not only just do this randomly, middle of the mean. That's, you have no edge there. But when you're at the bottom or the top end of the channels, that's where the edge shows up. Right? And use your probabilities to your favor. So,
and that's the other thing that I wanted to touch on too is I get a lot of calendar questions too, in the comments and also in my DMs and stuff. And I think that's something that people should take into consideration is just because you watch a video on YouTube and see like, oh my gosh, well, it looks like I can make a lot of money. I'm going to jump in and do it without like testing it out or having a feel for how the trade's moving, and then asking people and getting tons of questions like, oh my gosh, did I do this right? Like continue to test.
Wait, you're getting questions on digital because I'm getting a million questions on do this right too.
Yeah, like to where like they took the trade at the pyramid, right? Like at the top.
Yeah, that's the first mistake. I'm actually probably had about 5 messages on that directly in the last week of taking the calendar, but they're doing it one calendar right over the top of price, and then they aren't understanding why they're losing money when it's moving any direction. Which is fine. I mean, it's. Right. It helps you learn quickly. Don't do that again. But anyway, sorry, keep going.
No, but that was basically what I wanted to touch on is like take these videos that Halcyon and I, are able to make. And of course, I mean, your time's incredibly valuable. So I appreciate it that you come on and do these. And then for anybody who wants to trade these, like paper trade them, set up your analyze tab like Halcyon has his setup, practice with these, start to where, hey, I have a bearish viewpoint on the market for next week. So I'm going to set up a paper play, and let's see how this works out for me. So you can get a feel instead of jumping in with your real hard-earned money and be like, all right, I'm 10, I'm in with 10 lot size or 10 lots in, and I don't know what.
Yeah, you're upside down 5,000. You don't understand what's going on, and you bail on the trade.
Yeah, and like you could have added an extra leg and protected yourself a little bit, right? And there's so many other ways to handle this. And like that's one thing that I learned after the first video that you and I did when we were just talking about the single calendars. I was like, oh, and it makes sense. Like if it goes the other way, I'll just close it for a loss. And then the next video, you're like, hey, actually, there's a double calendar. You can protect yourself from the downside by just adding another leg on. And once I learned, like my mind opened, I was like, there's so many people who I bet are just into the single calendars and never realize because they're so new to this style of trading that, hey, if I add another leg, I can limit my downside risk to that direction.
Yeah, that's an interesting point that I think I've had a lot of conversations recently since we've been doing these videos. I mean, I've obviously got a lot of messages on these, and I try to answer everybody who asks a question legitimately is actually asking a question, wants to learn about it. Mm-hmm. But I think that's the thing that we get into with, say, like some of the other styles of, I mean, there's tons of different options, strategies you can do, but say somebody puts on like a debit spread or does, some other version of a style of a strategy. And the thought process is for a lot of people is that they put the trade on and it's like stamped in place and there's nothing you can do other than roll it if it goes against you or close it, take the loss, and then consider what else to do next. That's the unique thing with calendar. Well, maybe not unique specific to calendars. Butterflies do some stuff like this, but calendars, this is one of their advantages, is they are very, very forgiving for completely messing up your entries and on the trade because they're theta positive trades. So you don't have to be perfect on the timing. You can be wrong a little bit on the price, and you can still have a profit show up for yourself. As I actually our last, it was a quad calendar we did in the room. This was 2 weeks ago, expired last week Friday. That was an absolute, just a bastard of a trade. I mean, we put it on, and then the market ripped down 200 points. We had to defend the opposite end, and then it ripped back up 200 points. I mean, it was just all over the map.
I remember that day.
And at one point, I think on my SPX version, I was off 4,000 on the trade. But because I've done them so many times at this point, and I still had, I think it was 6 days left in the trade.
Hmm.
I knew that number is not really what I'm going to be off on here, because
Hmm.
theta was at that point getting up to 1 or 2,000 a day. I mean, it was getting some pretty healthy numbers there, and I was like, "There's just not, there's no way that this is going to lose 4,000 in this trade. It's not possible based on the way the math is working out." So we just held on and held on, and at the end of that trade, with all the wildness and all of the mistakes that were made on getting, and I wouldn't say they were mistakes, they were necessary, have to defend, but I did some extra kind of, finicky, trying to be cute with it, things, and taking some contracts off, and which was unnecessary. It would have worked out fine if it would, the price would have gone the way I thought it was going.
Hmm.
But even with blundering the whole thing a couple of times over, we still made profit on it. And if we would have held till the final day, that trade closed for 10,000 up for the trade. And I think we automated with 7,000 or so that we put into it total,
Hmm.
but it was up 10K at the end of the day on that Friday, which was a good learning lesson. Obviously document and journal your trade so you can come back and look at what works, what's not working. And as you know, I've talked before, Logan, a lot about this, is most of the time it's the psychology and your ability to control your emotions that are going to be more important on the profit loss
Hmm.
side of things. Because think of how many times that and everybody's done this who's ever traded for any amount of time, how many times you've done gotten a trade, put some heat on you, you hit your uncle point, you close out a trade, and then it immediately turns around on you and goes right back up.
Yep.
I mean, that happens all the time. And the understanding what is going on under the surface with yourself, it will drastically improve your ability to be profitable. I mean, in many ways, the market, your job is to get your ego out of the way. If you can get your ego out of the way of being being in that space where I have to be right about this and I'm willing to lose money to be right, it's just a stupid way to go about approaching the market. Your job is to make money,
Yep.
not be correct on which direction everything is going. Because guess what, the market can go the wrong direction longer than you can stay liquid. And that's just a hard pill to swallow, because we're also beating our chest that we know everything about what's happening all the time, kind of thing. It's just a battle we all battle all the time that you trade. So
Yeah,
yeah, there you go.
pride and humility as a trader. It's a great
Oh
way to.
man, it is and it's fun how that works. When you start winning a bunch in a row, you get win after win. It's like your head just gets gigantic. I'll bet you money too. Like, your biggest losses come after a string of a bunch of wins.
Yep.
For most people, because you get you forget about that it goes the other direction, or you forget about whatever way that would cause pain in your trade can actually happen. Which is it's a learning process again, and it's awesome that so many new people have gone into the markets over the last year and a half, and and then hopefully they're finding success. Hopefully well, I know for a fact I've talked to a lot of people that are in your Discord
Hmm.
that are newer traders, and have it's been a monumental movement in the right direction for their own trading, just by having access to a bunch of other people who are seasoned traders in the Discord, who are answering questions, not because they're getting paid to do it, because they genuinely want to help other people out. And there's a number of really good traders in your group that are just doing that on their own time, which is pretty sweet.
Yeah,
And
seriously.
I know I've had a lot of people say, man, it's just really helpful in me understanding how this whole thing works from people who've been doing it for a lot longer, and giving back to those, and hopefully they can be successful too. So
100%, man. Well, I appreciate like all your help as always with everything, and I think this is a great spot to wrap up the video, and we'll have you
perfect.
back on soon. And as you know, like we can always make time and whip up a video for any of the questions. So if you guys have any questions, leave them in the comment section below. But that's gonna be everything for us today. If you're cool with everything, Halcyon.
Yep. All good, man. All good on
Perfect.
my end.
Perfect. Well, I hope you guys enjoyed this video. Make sure you leave a like, comment a monkey emoji below in the comments, and also hit that subscribe button. And then you guys can find some links in the description as well. There's a free Robinhood stocks upon signing up, and then also the link to the Discord is in the description as well. So I really appreciate you coming on, man. I hope you have a great rest of your day, and I hope everyone else does too.
Right. Thank you.